silver is unhated. And as you rightly point out, the easiest money that's made in speculation is the move from hated to unhated, which has already occurred in silver. I believe that silver has farther to go, but I'm also a disciplined speculator. So in my speculative silver stocks portfolio, I've sold between a third and a half of my position. I've maintained my positions in the hybrid silver companies, the Pan Americans, the Wheaton Precious, and I've maintained my positions too in the high quality Latin American producers, the Buenaventuras, the Peñoles, that sort of thing. But what I laughingly call the silver animals, that whole panoply of silver exploration stocks that have some silver in the ground but don't have the means to produce it. I've been a fairly aggressive seller of those. To be clear, I think the complex goes higher. I don't think that the silver bull market has really started. I think we've seen signs in the last 4 weeks that leadership is changing from gold to silver. But to be honest with you, I don't care what I think. If I have a speculative position that's up 400%, where I haven't seen real improvement in the underlying company with the exception of the commodity price, I've learned to take my money off the table. A circumstance where I can sell between a quarter and a third of my position and eliminate all of my downside in return for giving up a quarter or a third of my upside seems like a hell of a trade to me. So that's what I've done. I don't have any hard and fast rules. If it's too easy, well, here's what I do, Antonio. You'll remember in earlier conversations where I said the money in exploration and development was made answering unanswered questions. I try to figure out what the probability of a yes answer is, how much time a yes answer will take, and what a yes answer is worth. And if the market gives me the market capitalization that I had hoped for with a yes answer before the question has been called, I take money off the table. That's free money. And it doesn't matter to me if I think the stock is going up. I don't care what I think. I think October is going to be a blisteringly hot month in speculation. And I'm using it to reduce my speculative positions. Most people, particularly younger people than me, would try to squeeze every farthing out of their position. I've learned to be different. I've learned to pay attention to the market in reverse order. When the momentum is, well, I do what the market demands. Right now, the asks are getting taken out. So I'm supplying some asks. 2 years ago, the bids were getting taken out. So I supplied some bids. I accommodated the market. When people wanted to exit, I was a buyer. Now people want to enter, I'm a seller. And yes, I think it's going not merely higher, but much higher. But to reiterate, I don't care what I think. This is an easy time to take money off the table that was easy to make 2.5 years ago. And the silver space has got a plethora of buyers. I was looking today at Paul Harris' work for the Mining Journal about all the small silver financings that are taking place. When the companies are trading large amounts of their equity for cash, they're telling you that they think the cash is worth more than the equity. When they're using their money to buy in shares, they're telling you something different. And you're wise to learn. Now, I'm not trying to say that the money that they raise can't be put to good effect to lift the fortunes of all the shareholders. All I'm trying to say is that when a company with a $100 million market cap does a $25 million financing, they're telling you that they view the money as being worth more than the stock. And you're wise to listen. In a bear market, the rules are take the stock, take the stock, take the stock, if you have good people. You just have to look at the market signals and do the opposite. If you're willing to take some risk, probably the development stage juniors, high quality development stage juniors, Abra, Vizsla. If you have some courage, right now, Aya. But I think I'm going to interview Benoit LaSalle. You may know that a short report was published yesterday.
Yep.
And I'm hoping to interview Benoit LaSalle in the real classroom and allow Benoit to give his side of the story. If you are willing to tolerate political risk and you think that silver is going higher, I count on both those scores. I think perhaps you look at Fresnillo, albeit the current president of Mexico has personal enmity for the family that controls that company. Perhaps you look at Buenaventura. but you expose yourself to real political and social risk in Peru. I think Pan American Silver, or pardon me, Pan American Minerals, by the way, is, irrespective of its silver assets, in pretty good condition. They sold some redundant assets, paid down some debt. They have worked on the assets that they acquired that required sustaining capital investments. So I would own Pan American separate and apart from its silver pedigree. I have a very large position in wheat and precious. And while I'm still selling other stuff, I'm still buying wheat and precious. You'll notice a 72-year-old's skew away from the penny dreadfuls, which is where I cut my teeth, more towards market beta than alpha. I don't think industrial materials, I mean, people are buying the industrial materials narrative because of geopolitics. We're in a precious metals bull market right now. I don't think we get into an industrial materials bull market for 2 or 3 years. There are a lot of headwinds in the economy. I think the very soft oil price and prior to 2 weeks ago, the soft copper price is a function of the fact that there is a much slower global economy than people are giving credit for. I think we will experience real shortages of things like oil, gas, copper, nickel, 5 years from now, 6 years from now. But you can have supply shortages if you have economically related demand shortages and you don't move price. So I think we have to, absorb a soft economy for 2 or 3 years before we come into a real industrial materials bull market. I think the other thing that a lot of speculators don't recognize because it's not in their time frame is, first of all, that inflation is much higher than we believe it is. When Americans look at inflation, they think of the CPI, which I characterize as the CP lie. They believe that the deterioration in the purchasing power of their dollar is proceeding along at 2.5 or 2.6%. I think it's more like 8% or 9%. What that has to do with industrial materials is what is believed today to be an $8 billion capex to build a copper porphyry is actually an $11 billion capex. And that capex number is escalating at 8 or 9% compounded. That means that the incentive price needed to amortize $11 or $12 billion is going up by 10% compounded. And that means that existing assets that don't need to be built, that are carried at book after a lot of depreciation with 25 or 30-year mine lives, are twice as valuable as the market thinks they are. It is possible to be bullish and take near-term profits. I am, right now, as we speak, selling between a quarter and a third of my positions in the gold explorers and developers because they've given me too much too fast. I believe October is going to be a blistering hot month for the gold stocks, which is, from my point of view, a wonderful time to sell some because there's bids. I believe the gold price goes much higher over 10 years. But that doesn't matter. I have the ability to de-risk my portfolio right now, take all the risk out of the portfolio. When I'm at what I call the point of no concern, where I have a position where I've sold enough stock to recoup all of my capital and pay the tax, I become extraordinarily patient. And I'm putting myself in that position during the month of September and October. I believe that the US dollar, in an absolute sense, loses 75% of its purchasing power over 10 years. Paradoxically, I think it does relatively well compared to other fiat currencies. In other words, I think it'll do okay against the euro, okay against the Canadian dollar, okay against the Australian dollar. But in an absolute sense, I think it loses 75% of its purchasing power. I believe that it's likely that gold's rise in nominal terms, US dollar terms, mirrors the decline in US dollar purchasing power over 10 years, which means that I think that the gold price in nominal terms could easily go threefold from here. I believe, too, that over time that'll be reflected in the equities prices. I think that you look at the decade of the 1970s for the analog. I have the ability right now to monetize the fact that the junior gold stocks have gone from unloved to loved. And I have the ability right now, without disrupting any of the names, to sell enough of my position that I have the rest of my position, which is substantial, for free. I have the ability to eliminate the downside in my speculative position by giving up a quarter of the upside. And that's a hell of a trade. I am adding also to my transactions as a secured lender in senior secured construction facilities for the mining business, which is a 12 to 15% internal rate of return business. Good business for me. And I'm keeping a bunch of my, I mean, don't get me wrong, I'm keeping a bunch of my upside in the developers and the explorers. I'm just eliminating all of my downside.